Hi, this is Wes Middleton. Thanks for joining me again for another session of our tax tips. I'm going to talk today just a minute about a change in accounting methods for contractors. And so, of course, if you're a contractor, this is always a very interesting area to focus on, especially if you're a contractor and over the last several years, for example, maybe you've been over the $10 million in revenue and you are now on what we call percentage of completion method, or PCM, for tax and accounting purposes. A lot of contractors don't really like this for tax purposes, because what it does, this method of accounting, makes you recognize revenue as you incur the cost of the contract, not when you bill the contract or not when you collect on the contract. So a great new change in the tax law is that the revenue recognition policy for contracts has now been changed, where up to $25 million average gross receipts, you can now use the completed contract method of accounting for contracts. That's very important for those of you that are out there that are either have just had to change to PCM or you're contemplating a change. This is something to look into, because not only does it change the way in which we account for revenue on the contracts, the new tax law allows you to also use the cash method overall accounting for your business. And what that means for a contractor is this. We have two separate things we account for on a contractor. First is you have your overall method of accounting, and that can be cash or accrual or whatever that modified basis may be. But then we also have the way we account for revenue for your long-term contracts. And when you are forced to switch to the percentage of completion method for long-term contracts, the tax law historically has also forced you to use the accrual method for your overall accounting in order to account for the long-term contracts. That has completely changed today. So with this new tax law, you can now switch to completed contract for your contracts, which then also allows you to have the cash basis. So if you are a $25 million average gross receipts contractor and you are looking for a different way of accounting for contracts and something maybe more advantageous to you from the tax method, there is an opportunity. Here's the great thing for contractors. You can have this method for your tax return and have the percentage of completion, which is required for GAAP accounting. And so two methods of accounting can definitely be in play here. If you want to find out more about this change in accounting methods for contractors, check us out on our website, mrzllp.com, and go to the Idea Center, and you'll see the contact information there, and along with the blog and some more information on these changes. Thanks. Hope to see you again soon.